So the Federal Reserve is going to be having one of the most important meetings probably this year on possible rate cuts. Now, in today's video, we are going to be talking about what this means, what should you do, and just giving you guys my overall opinion on this. So I hope you guys all enjoyed this. If you guys are new, hit that like button and subscribe. My name is Carter. I'm a full-time investor and trader in the market. We do have an amazing school where I teach people my strategies, my approach, how I find stocks. It's absolutely fantastic. We got private live streams. We got a group chat, quizzes, lectures, all that good stuff. So make sure you guys check it out down below, and you guys can use code YouTube to get 20% off. So check it out. But guys, let's jump into this here. So the Fed has a very big decision this week. A lot of people, a lot of investors are split on what the Fed's going to do. Some people believe they're going to cut the rates by about 0.25%, while others think that it's going to be about 0.5%. Now, this is going to be kind of two approaches. If we just have the soft landing approach, which is the 0.25% or 25 basis points. Now, I personally think this isn't going to cause too much in the market. I do think it's going to be a bullish thing for the market just because this is going to be the first rate cut that we've seen in a very long time here. And I really think that with inflation cooling to 2.5%, this is the lowest rate in almost 3 years. So a lot of people don't realize, but there is a huge correlation between inflation and interest rates. Often, here's the thing, when inflation is high, banks' interest rates may rise. As a result, what we also see is when inflation is low, we see banks lower rates. I think we all remember when you guys could get a home loan or a mortgage around 3%. It was unheard of to see savings account rates or, high yield savings accounts at 6-7%. That's just not how it worked. You have a huge correlation when inflation is low, we see interest rates low. So given that right now we're seeing inflation cooling to 2.5%, this could be a very bullish thing for the stock market to see, because this is going to cause a lot of investors to flock to the market to invest into future growth, because lower rates means lower mortgage payments. It means more car payments. And I know you say more car payments. What? Because people are more likely to take out a car loan when we see lower rates. People are more likely to buy homes when we see lower rates. So I definitely think this upcoming Wednesday, the Fed is going to be, it's going to be kind of a win-win for all of us. Because if we do have any rate cuts, I think this is a very bullish thing for the market to do. So looking here, you guys can see what I mean by this. The Fed will announce pretty much this Wednesday. Markets are largely split on whether the central banks will cut by about 0.25 and points to a range of 5% to 5.25, or 50 points in a range of 4.75 to 5%. If we have this 4.75 to 5%, this is gonna be bullish. This is where we're gonna see an amazing day here. So there is a case to be made for both. On one hand, inflation has remained above the Federal Reserve's 2% target. So the Fed wanted to have the inflation rate, instead of being 0.25, they wanted it around 2% target. So this is hotter than expected readings on a monthly core inflation suggesting the Fed should only cut it by about 25 points. So I do think I understand where they're coming from, but this is the soft landing approach. With the core inflation coming in higher than expected, the Fed's path to 50 points cut has become more complicated. So I'm excited though. I think that right now we're going to see just a lot of volatility. We're probably going to see a relatively flat market for the next couple of days until Wednesday. But overall, if we have a huge cut, this is going to cause a lot of stocks to fly up. The only reason why we're getting some sell off in a couple, we saw Nvidia squeezing up a lot this previous week, and Apple, we saw a good sell off of 3% just because there is a little bit of a lower demand for the new iPhone 16s. That's why we're getting sell off. But overall, the general market is green, other than a handful of customer electronics and semiconductors, which has seen a great week previous. So guys, I'm excited though. Let me know down below if you guys are buying beforehand. And to answer that question of should you invest beforehand? Should you trade beforehand? That's the big question. One, I think it all comes down to time frame. It's better to have time in the market than trying to time the market when you guys are investing. If you guys are trading, I would rather see you guys sit on the sidelines for an announcement like this. Even though we could see an amazing move, I'm going to probably, hold, NVIDIA and a couple of other positions that I'm already well up on. I'd be very surprised if I do take a new position before this announcement. So guys, I hope you guys all enjoyed this. If you guys did, hit that like button and subscribe. And I hope you guys have an amazing rest of your day. Like, subscribe, and don't forget to check out our school. And we'll see you guys in the next one. Take care.